Hi there, I'm Daniel for Kalkine Media. The dollar crept higher on Wednesday as top executives from the biggest US banks warned of an impending recession, which dampened risk appetite and kept the greenback supported. Top bankers from JPMorgan Chase Co, Bank of America and Goldman Sachs said overnight that the banks are bracing for a worsening economy next year as inflation threatens consumer demand. Against the dollar, sterling fell 0.4% overnight and was last 0.05% lower at $1.2128 US cents. The greenback rose 0.16% overnight against the Japanese yen, but erased some of those gains in early Asian trade and fell 0.04% to 136.97 yen. According to Joseph Capusado, he said they've been forecasting a recession in the US and the UK, the Eurozone and Japan as part of its baseline. He said that will provide more support to the US dollar as a safe haven currency. Against a basket of currencies, the US dollar index was last 0.05% higher at 105.60 US cents. It had risen nearly 0.3% overnight, extending a brief rally for a second straight session after upbeat US services and factory data released at the start of the week pointed to underlying momentum in the world's largest economy. This supported the view that while the Federal Reserve may scale back the pace of its rate hikes, US rates will remain higher for longer. Elsewhere, the euro was last 0.13% lower at $1.04.6 US cents. Two European central bank officials signaled that inflation rates may be close to peaking ahead of the ECB's monetary policy meeting next week. The Aussie dollar was last 0.16% higher at 66.99 US cents after a muted reaction following data release of its gross domestic product on Wednesday, which showed that Australia's leading economy slowed a little in the September quarter. The antipodean currency remained buoyed by a hawkish stance from the Reserve Bank of Australia, which on Tuesday signalled more rate hikes ahead to cool from inflation after it lifted its cash rate by 25 basis points to a 10-year high. The Kiwi edged 0.02% lower to 63.17 US cents. In Asia, China's November trade data is also due on Wednesday and is expected to show a further contraction in the country's exports and imports. According to RBC Capital Markets, the exports boom in the Asia-Pacific region has waned definitively.
Right now, Kalkine is offering a 7-day free trial on its premium research reports. Get access to data-driven market insights combined with an in-depth analysis on financial markets across the globe. Don't miss it. Subscribe for the free trial now.
According to Alvin Tan, head of Asia FX strategy at RBC Capital Markets, he said that this adds urgency to China's need to boost domestic demand to compensate for faltering exports and the still weak property construction sector, hence the pivot away from zero COVID. The offshore yuan was last marginally higher at 6.98 cents per dollar, having been supported by an easing of China's strictest COVID-19 restrictions. The country may announce 10 new COVID-19 easing measures as early as Wednesday, according to two sources with knowledge on the matter who told Reuters. Let us know your thoughts in the comments and don't forget to like and subscribe and hit the bell icon for future notifications. I'm Daniel for Kalkine Media.